How's it going, traders and investors? Welcome back to another market breakdown where it is my mission to get you guys a professional perspective and the trade ideas you need to succeed in markets around the world. If you're new, I'm glad you're here. My name is Rader, and I aim to give you all the information you need in just around 10 minutes. So stick around for that. We have a lot to unpack ahead of those US bells tomorrow, April 20th. So let's catch up and get right into that juicy information. Alright, and what happened today? We discussed yesterday, if we gap down, expect us to come down and touch this 411.30 area right in here. But what was actually interesting and is a great example of why you should sometimes have your after hours chart on is we did touch it pre-market. And you can see just before open, we had an explosive response, and right off the rip, we played the gap fill. The typical rule is if you gap down and then make a new high within the first 5 to 30 minutes, you're likely to go fill that gap. And likewise, if we do gap up and make a new low within the first 5 to 30 minutes, it's likely to go fill that gap to the downside. So sometimes playing those key zones and simple theories is what makes you profit the most. But Rader, that's what did happen. What about what will happen? I know that's what you guys come for. So let's break it down and give you all the trade ideas you need. So looking at our future looking SPY chart here, pause this video, map down these levels on your chart, but the three scenarios are this. If we do gap down, we do expect SPY to continue down to this 411 where it will chop and then break. This was a liquidity level. However, since we did bounce here, this is the new one. And if we do gap below it, this old one will likely be broken. So we will bet on the break of this down to 409 if we come down and chop. But once again, we need a gap under this green zone. The second scenario, if we don't gap down, is that if we stay here, there's not really much we're expecting to the green side. However, this is the golden zone, and there's always this golden opportunity that presents itself in markets if this one scenario plays out. If SPY does gap up or climb up to this gold zone right here on this high, if it does chop and make a little pullback, we want to see a little liquidation, we want to bet on the break higher. Again, this has to come up here, chop, see a little liquidation against trend, and then bounce. We will be betting on this bounce off the liquidation. We'll talk about this at the end, but let's discuss the rotations. Next up, looking at the rotations, where are people moving money into and out of? Where's that smart money moving? Well, I'm looking right now at the S&P 500 sectors, and what I typically look for are certain stocks and sectors to group up. So I want to see growth names group up, I want to see value sectors group up, and right now what we're seeing is not a lot. It is earnings season, there is a lot of names that are dependent on a lot of the earnings, so we don't like to look at those. However, looking at these smaller time frames, a big winner recently has been energy, names like Oxy and those oil names. But moving away from the sectors, because they are really earning dependent, and that's what's going on this week, we do have the industry. Now, industries are different from sectors because they are more niche. And on the 60-minute here, it does seem like XOP, once again, that oil name, and PBW are getting a lot of juice. These other industries I don't really want to look at because of how confused they are. And going down to the 30-minute time frame, of course, depending how we open tomorrow, I will be looking for a continuation in PBW on the macro trend right here to time it with this 30-minute. On the 60-minute, when it is setting up and crossing this midline, which is our golden entry zone right here, we do like to time it on the 30-minute, so this is a great sign. So be looking into that clean energy and XOP. Again, this depends if we gap down or up really big. So I encourage you guys to go follow my Twitter. I update you guys on the rotations every day. And moving on to the option flow, what are the high value trades this week and what can we get some trades from? Well, if you guys don't know my flow strategy, I was taught to it by my mentors and it is awesome, so pay attention. For those that don't know, our strategy does rely on entering on these high aggression option flow trades at their max pain point. I don't think these 421 guys are going to work out very well, so the real trade idea is in this 428 expiration guy. You put $2.2 million on this trade. And so what I'll be looking at is for Meta to make a pop and make a new high. I want it around that $29, $30 area. I've been talking about this all week. Once it comes up to there and this guy's down between 60%, somewhere around there, we'll be taking that trade for the 28. And next up, we have ATVI. Now, if you guys have been following this, we've been looking for a contra trade of what we call it, where we look to bet against him because of how big the order is. On a stock like ATVI, $2.6 million in calls is an absurd amount. And this is really demonstrated by looking at something like the options chain. Right here, you can see the options chain. And what you want to look at is this open interest column right here. And what you'll notice is there's nothing other than this $10,000 contract area, and that's him. He's put a target on his back now because market makers will look to close below this. So in this one, simple idea. Comes into 87 or above, we look to short it. And next up, looking at Tesla, this guy was a really big order, really exciting one. He had around 6.6 million on this call, and he is down around 18%. But if you look at Tesla after hours, they are selling off quite a bit right now. So if off the morning we start to slow down, I will look to play a bounce on these as they will be heavily discounted. And next up is the Zoom and the Solar. So the Zoom guy right away, he is in max pain right now, I believe. I did take an entry on this today if you were watching, and I think there might be some more downside to this. So I will be watching this, but I do ideally want it off to 64, but I didn't want to miss it in case we gapped up today, so I did take these right here. So again, 64 is probably the better buy right here. And of course, how could I forget the Solars? We've been talking about this one forever, ENPH and the FSLR. These are both solar names. We've been talking about the classic Wyckoff theory, right? The spring into the market maker cycle. We wanted to see this violate the highs, and then we entered. That's exactly what I did, but I am down due to chop. So I am down around 40% on these, which sounds like a lot, but they do recover quickly for the 28th. So this is looking like it is continuing to be a spring. Judging by the looks of the market, if we do gap down as we're showing right now, we should see these ones be up quite a bit. And this is the beauty of combining technicals with that option flow, as we mentioned that we want to short off that third deviation, which is again the midline of the copied channel. The next ones are these Airbnb puts, and the Airbnb ones are special because I do believe that this one is going to punch through this red zone, be a fake out, and then we get the drop. Now this Apple and XOM is going to play out next week. The ones I wanted to talk to you guys are this EMR and this Crocs one I found. So I scanned this one today and he got it in the morning. And what I'm looking for here is anything below 85, and I will look to get this on a bounce. So tomorrow if we do drop into 21, we will expect this one to bounce. And this one right here is Crocs. Like I said, earnings is coming up on these stocks, and so it makes it a little hard for this flow to play out. However, we have identified a key liquidity zone. Anything around this 36 to 37 zone is going to be our entry. It is a little conservative, but that's what you have to be on this earnings flow, because if you do get a good price, then it puts you in a favorable position of risk. And as far as sentiment, guys, keep in mind that we are still too heavily neutral from money managers, so expect lots of fake outs, lots of chop. We've been discussing this a while now. Firms are dropping a lot of leverage from this chart here and this one right here. Both show a huge drop in liquidity and buy side from the firms. So remember, if you guys do want to time a market top, look at the put to call ratio, the PC. If this ever gaps down below 0.69 and then pumps right back above, you should see the top within 1 to 2 days, almost guaranteed. That's it for me, guys. If you haven't subscribed already, it would really make my day. Stay happy, stay humble, stay green. I will see you guys in the order books this week, and have a great day, Rader.
I never switch sides, like even when I